Hey there, fellow Forex traders and investors. Cecil Robles here with a somewhat of a market update today, as well as a little tip or a little trick to help you in your trading endeavors. This is a kind of a trading technique that I learned a number of years ago, and it shows up quite often. And if you're, on your toes, you can actually take advantage of it quite a bit. And essentially, it is what is called an engulfing candle, but it's a little bit unique. It's a little bit different. And what I like to do is every day after the market kind of settles down and closes around 4 p.m. Central Time, which is where I'm located, or 5 p.m. New York time, I like to look at the rollover of the daily bars to see what all transpired during that day. And sometimes that'll help me make a trading decision for the next day. I don't day trade very much, but when I do, I look for these types of opportunities, and then the next day I'll look for opportunities to get into the market using a certain directional bias. And in this case, I'm looking at the Euro Canadian dollar, which has been actually a pretty hot pair here over the last month or so. As you can see, we've had a nice little run up here. It wasn't a major downtrend, and then it kind of went sideways for a while, which is to be expected after a big trend. And then we had a nice little run up here and a break above the cloud, the Ichimoku cloud, which is something that I like to use. And of course, when you have that, generally a lot of times you're going to have some kind of a pullback back in to retest the support areas, support or resistance areas, depending on which direction you're trading. In this particular case, we had a pretty large pullback here yesterday on this particular pair. You can see that we had this large red candle here, and that red candle signifies downward pressure in this particular market. Now, this is a significant candle because you can see we had two green or two up candles. That means that the market closed higher than it opened on those 2 days. So here's the real body right here. Here's the open of this particular day, and then the market closed way up here. And then here's the open of this day, and the market closed way up here. Well, then the following day, we had the market open here, tried to push higher, as you can see by that wick on top of that candlestick. And then you can see that it pushed all the way down, and it actually closed at the very low of the candle, and it almost engulfed both of these candles. And what I mean by engulfed, I mean that the price move was almost as significant as these two prior candles. It basically engulfed that whole particular move. And when you see that kind of movement in the market, it's a safe bet, especially when it is against the trend. So in this case, the market is moving up, you can see, and then all of a sudden it pushes down very rapidly, and it creates this engulfing environment right here, engulfing candle. And so the next day, which is today, you can see that the market was down again. And a lot of times that is a good indication that the market is going to continue down. So one of the things you can do in that particular instance is drop down to the 1 hour chart, which gives you a day trading type of an opportunity. And in this case, if we drop down to the 1 hour chart around 6 o'clock Eastern Standard Time, or rather Central Standard Time, 7 o'clock Eastern Standard Time, you see that the market did push down, came back up, and then pushed down again, broke down below the lows of the previous day, as you can see here, and then continued down from that point right there. So this was a nice trading opportunity or trading environment by taking a short below either this low or taking a short below this low, and then letting this ride out. And one of the things you can do as far as looking where you would take profits on this kind of a trade is really simple. Once we got into the oversold area right here, I'm going to blow this up a little bit, and this is the RSI, just standard 14 applied to the close. Once we got into the oversold, when this candle closed, it closed in the oversold area of this RSI, and that's generally a good indication that the market is going to start waning out, and here it sure enough did. So what we can do, once that closes in there, we can start trailing our stops. So if we trail it up to the top of that candle, we can do that, and then we trail it up to the top of this candle, and then we eventually trail it up to the top of this candle at 1300 hours Central Standard Time, 1 o'clock, and then we get stopped out on the very next trade with a nice tidy little profit. Now that that's said, what do we have as an opportunity here today? Well, here is the euro pound, and I'm going to go to the daily chart so we can kind of see this in the big picture here. you can see that the daily chart, ever since the pound, the Brexit happened, we've had obviously a pretty significant run to the upside there when the Brexit happened. Then we had a pullback, and then the market's just kind of been stagnant. But you can see here we had a nice little pop today, and that's that same engulfing candle type environment. We have these two previous down candles, and then the market popped against those candles pretty significantly, and it looks like it's about to close at or near the high, right? And it's still not overbought or anything here on the RSI, and so this is still a good trade opportunity. So what we can do is, of course, again, drop down to the 1 hour chart and begin to look for additional trade opportunities, either through a nice pullback and then a buy on a using a buy limit order, or with a breakout using a buy stop order. And so one of the things that we can do is we can essentially take and say, okay, I'm going to go from this point to this point here, and if price pulls back to this 61.8% fib, okay, then I am going to buy into this particular market with a buy limit order, with a stop loss below, say, this point right here. Okay, so if I enter here, stop loss below there, and then I take a 161.8% Fibonacci retracement extension, so to speak. If I take this and I go, okay, I'm going to take a 161.8% Fibonacci extension from that low point right there, and I could essentially see price potentially reaching this 85.31.4 area. So if I bought in, somewhere down here at 84.62 and got out up here at 85.30, that's a pretty nice little trade, especially on the euro pound. If you're trading in US dollars, you're going to see a pretty significant gain there. It's not huge pip gain because the euro pound doesn't move that much, but it is a significant dollar gain depending on how much size you're trading. Or I could just simply take a breakout point, say at the beginning of the European session, look for that pop, look for that breakout, and look for price to come up here around to that 85.30 level. And of course, that's going to give me a nice little tidy profit with a stop loss below this low here. So I'm gaining more than I'm risking in that particular trade, and that's a nice little payoff right there. So this is an opportunity where you can see that kind or that level of profit. I can also pull the Fibonacci from down here, and I could say, well, I'm going to wait and see if price will hit this 382 level. It's probably not going to go down that far if it's going to continue to the upside, but it definitely could. We could see a pop down to that 382 level, and in that particular instance, then we would put a stop loss below the 618, and we would target the 127.2 fib from here to here. So then in that case, we'd be looking at 85.13 or so for a profit opportunity. So this is something to look forward to tomorrow, or at least if you're trading in the European session, you can begin to look for that. It's probably going to be over by the time the U.S. session opens up at around 8 o'clock Eastern Standard Time. It's probably going to be over by that point if this does happen. So you may want to get ready to take this particular trading opportunity and shoot for a target around 85.30, 85.35, somewhere around there, with the stop loss fairly tight down here at 84.46, and an entry around 85, pretty close to where we are right now, if indeed you're going to take this particular trade opportunity. But you may want to wait for a pullback, but these kinds of opportunities, open up fairly often. All you have to do is really look at the daily chart, and you'll see these types of opportunities open up. So you can see that here. Several instances, you can look over and over and over again and see when you have a big move in a particular direction that engulfs, another direction. For instance, here's this big candle here. Well, what happened? The next several days, the market continued to move to the upside here. So there was a lot of buying opportunity in this particular environment, and then eventually the market dropped off, and that waned that particular movement out. But a lot of times you'll see those opportunities. Here was another one. The next day the market did move down, not significantly, but it did move down. And so when you see those kinds of opportunities where you have those engulfing candles during a particular day, then it's a good idea to look the next day for buying opportunities or selling opportunities, depending on which direction it's going to go. So I hope you enjoyed this little tip and this market review, and hopefully you make some money with it.